Hey y'all, what y'all been up to? I haven't been up to much. I've been working. Um, I've been trying to readjust myself with option plays and with stock ownership. Um, I've really, I kind of want to get into the mindset of kind of buy and hold, set and forget type of thing with a little option kicker. Trying to decide which funds I'm going to buy. Um, I don't need high yield income funds anymore. I actually got rid of some of them. PDO, some of you follow me for a long time. I got rid of it. I just don't need the ordinary income. So I already do enough in options that I get a lot of ordinary income uh, tacked onto me. And, the less I have to pay to Uncle Sam, the better. We get taxed enough already. Wasn't that the saying? Taxed enough already? Yeah, I believe so. So I'm kind of adjusting what I do. I want to own blue chips for the most part and qualified dividends. Um, that's what I've been doing. Trying to readjust is what I've been doing. I did pick up some shares of Coke this week. They went on a big drop. I wish I would have bought more, but I didn't. I think I got, actually, I know I did. Let's see, let's go to here. I got it somewhere. Yeah. I bought 10 shares at 52 bucks and then another 10 at 51.70. I had another order in for 10 more shares at 51.50 and it never got there. And then it reversed. PEY is an ETF I reviewed a long time ago. A lot of the stocks that I was looking at buying are in this ETF. It's a monthly pair. It has a high expense ratio, but it has all those kind of dividend. It's a dividend champion ETF. So they've been growing dividends for at least 10 years. Everybody in there. There's only 50 stocks. Has about a 4.8% yield right now, annualized, which isn't great, but it's not bad, right? I mean, I could be in cash and making that kind of a yield. But I need exposure to equities. I really haven't had exposure to equities this whole year. And with me working and not really being in the market very much, I've been buying it. So I bought 20 shares at 1882, another 20 at 1875, another 10 at 1850. I got a put out to October 20th that I got 15 bucks for. But what am I going to pair with it? I don't know. I'm really thinking of probably just pairing it with some QQQM, which is the NASDAQ 100 growth ETF. But we'll see. We'll see. I already own it, so I might be adding to it. If we go to the quick view real quick, you'll see a bunch of stuff in red that I'm going to possibly be buying, like Bank of America at 28 bucks. I have no problem. Like I said, blue chips and ETFs is probably where I'm going to go. I don't mind owning Bank of America at 28. Kroger, that probably won't get assigned, but I have no problem buying Kroger at 44. Verizon at 32.50. Not horrible. Arbor Realty Trust. I know I said I want qualified dividends, but I think this is a dividend growth play here. A little risky. XLU, that's the utility sector. I think that sector is ripe to buy right now. I'll be buying it at 62.50, but I'll probably sell another put down there. But there's some stocks in the utility sector that are just getting beat up. NextEra Energy, that's just off the top of my head, has really gotten beat up. Probably could be the buy of the decade if you're a buy and hold type person. Dyno, that's the Sinclair Gas. Strong balance sheet on these guys, so not too worried about it. Also bought Coca-Cola. Like I said, I bought it on Friday at 52 and 51.75, and it bounced back up that day to 53. So it's down 15% on the year. Dividend King, you know, everybody hates, not everybody, a lot of people hate Coke because, it's the death juice, whatever. But I mean, in my opinion, it's a good buy. You go over the dividends. Oh, by the way, this is Seeking Alpha. You can get a free trial of Seeking Alpha Premium with the links down below. 60 years of dividend growth, low dividend growth rate, but, extremely consistent blue chip company. right? So that's why I bought it. What else do I got for you? Well, let's go to premium cooking. Why not? I closed a bunch of stuff out and lost some money for the week, down 580 bucks for the week. Not that big of a deal. I got 1,100 cooking. Probably going to end up flat for this month. Maintenance margin really low, 15.9. Cash balance, I sold a bunch of stuff. Like I said, I sold PDO. I'm just trying to raise cash and trying to get myself exposed to equities. Net lick went down to 111, lowest it's been almost all year. I'm still up about 5% on the year, so not too worried. Look at the quick overview, down 579 for the month. I'll probably have it end up with a flat month is my guess. But so that's what GW's been up to, buying blue chips, buying ETFs. Not a whole lot. I think I sold some SOXL puts. And that's probably, I'm going to be very deliberate on my put selling. And that's about it. What else do I got going on? Oh, my TV broke. Like, what the hell, man? The TV's only like 5 or 6 years old. Is that the lifespan of electronics nowadays? It was an LG, just won't turn on no more. It turns on, then it turns right back off. Did some resets and stuff, and it's just gone. So it's like, do you go to a TV repairman anymore, or is everything just disposable? Because I mean, what I had was a 60-inch TV. I paid like 800 bucks for it 5-6 years ago. If I take it to a shop, they're going to charge 100 bucks to diagnose it, and then if something's wrong, it might cost 200-300 bucks to fix, and then you might as well buy a brand new one at that point. And that's what I did. I went and bought a Vizio 65-inch for 400 bucks. Reason why I went with Vizio is because I got a Vizio TV in my bedroom that I bought in 2007 that's still working to this day. And I bought a LG that's supposed to be a better brand 5 or 6 years ago, and it's dead in the water. So I went back with a Vizio 65-inch. At least you're getting a bigger TV at a cheaper price. I guess that's a plus. I don't know, but it really concerns me about electronics. And it concerns me about electronics and the way the government is pushing electric vehicles on us. If a TV can't last 5 or 6 years, then, it amazes me that cars in general, not just electric vehicles, cars in general are able to survive the way they have been. It's really a miracle because they're just electronics galore. And and to have electric vehicles are even electronics galore squared. So I'm really concerned with that. They're just going to be disposable expensive cars is really what it's going to end up being, and eventually people aren't going to be driving because they can't afford to. But that's that. That's my rant for the day. So hopefully you guys enjoyed. I just wanted to come on here and ramble a little bit and check in with you guys. If you would, please use the links down below. I'd appreciate it. Hope you guys have a great weekend, and we will talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.